even some bailouts. Not all companies are worth bailing out, but of the ones that's worth it, we're doing that. We're also lowering our fees because we have the stamina to last. So that this way we can ease the pain on ease the friction on some of our for our users. So we're doing a number of those things. We like to do things off cycle. We believe that in the bear markets is when you should invest. So I think Binance is no longer a top-down driven from me. So I don't really decide what products to build, what to do, what not to do, especially products features. So I just set a general direction. We just want to build more tools for people to access Web3, blockchain, cryptocurrencies. So that's the general direction. We have, I don't know, depending on how you count it, we have 30 to 50 or 200 different products in the Binance ecosystem that's using BNB chain, centralized exchanges, decentralized wallets. I can't decide which direction to go. Guys, let's just build tools that people can use. So it's a much more bottom-up, grassroots kind of approach where different teams are working on different things, and they have freedoms to experiment. And sometimes they just build things, and many times actually they do build things that people use. So we have one of the most downloaded crypto mobile wallet, Trust Wallet. We now own one of the most visited websites in crypto, coinmarketcaps.com, which is for people to access information. Of course, we have the centralized exchange, and we contribute to the BNB chain ecosystem. I think all of those things are very interesting. So I'm not a very detailed, hands-on product kind of guy. So we just give them opportunities for our teams to develop. Well, I think there's a few different things. Today, I believe on the centralized exchange, where people want to see more security, more stability, especially in this sort of bear markets. Mm-hmm. They want to see more innovative projects getting listed, etc. In the industry side, I think wallets still is a big bottleneck for the industry. So for us to go fully decentralized, everybody hold their cryptos on their own. I think we need better wallet technologies. We make it easier for people to store their backups, their backup like private keys, seeds. If they eventually become unavailable at some point, how do they pass those assets to their kids? So a solution like this don't really exist yet. I know a bunch of people who are working on it. We're investing very heavily in these areas. So all of this are very interesting. It doesn't have to be fully related to the centralized exchange. The rest are but most of the time, the community feedback are very specific, very small. They usually don't give you big product ideas. So those are usually like adjustments. On big product ideas, you really need the entrepreneurs to go and try and fail and try, and then, maybe fail 10 times and succeed once. Sure. I think when you said everyone was rushing, I think we were a little bit slow in that race. So we didn't really rush to, we didn't name stadiums. We did less sponsorship. We didn't sponsor Super Bowls, etc. So we were a little bit slow in that race, which is actually not a negative. It actually gave us more cash now. So we're recently just starting in the bear market. Now we signed Cristiano Ronaldo, who is the most followed person on the planet. He has 450 million followers on Instagram alone. And so now we're doing we just signed Kabi Lama and another very famous TikToker or YouTuber. So we're just starting. So we were a little bit slow before, and that may or may not be deliberate. In bull markets we are quite cautious about spending. In bear markets now, we do have the reserves. So now we're using our reserves to sign partnerships, to do hiring, to do investments, acquisitions, sometimes even some bailouts. Not all companies are worth bailing out, but of the ones that's worth it, we're doing that. We're also lowering our fees because we have the stamina to last. So that this way we can ease the pain ease the friction on some of for our users. So we're doing a number of those things. We like to do things off cycle. We believe that in the bear markets is when you should invest, and in bull markets you should actually be more cautious. So we kind of took that approach a little bit, not fully deliberately, but we always knew For me, this is my third bear cycle. So personally, so I've been through a couple of this. Once you've been through a couple of this and you run a business, you will be more conservative doing bull markets when everyone's like really crazy and hot, and thinking that things will just go forever up. You're a little bit more cautious. So we always held more cash reserves than most other industry players. But there's no right or wrong strategy. But we'll just see how it goes. Yeah. We're looking. Well, so first of all, the word bailout has a specific meaning, but different people may attach different meanings to it. But it basically means helping companies that are short on cash, mostly. But in the real world, there's a spectrum of things. It's not black and white. Many companies are short on money. Doesn't mean most of the bad companies. The companies that does not have product market fit, that's poorly managed. Those things should not be propagated. Those things should not be bailed out. So that's one extreme. And the good companies, of course, they have no trouble raising money, and we would love to invest. And there's somewhere in the middle where some companies make minor mistakes. The first time going through a bear market, they have good products, good teams, etc. So we just gotta help them out a bit. And those things we're perfectly willing to do, and we're looking at a high number of deals like that. I think the U.S. companies make more noise because of there's Three Arrows. Technically, they're based in Singapore, but then their investors or people who loan them money, like Celsius, Voyager, all of those companies are kind of in the U.S. So there's quite a lot of stuff happening in the U.S. But there's also a lot of very great companies who are struggling outside of the U.S. and we're also quite active on those fronts. So we're active on the global front. And while deals are going on, we observe confidentiality quite strongly. We don't talk about in-progress deals. This is why, but we have a large number of deals that we're looking at. And some of them are actually good deals. So I think you will see that we'll be investing, bailing out, saving multiple projects. So to be honest, it's very difficult to sort of generalize and sort of comment who's good and who's bad, because of course, when things are going well, if you're a project that only gives 2% yield, and then this other project gives 10% yield, guess what? You're gonna lose users. And then there's a herd behavior. If somebody else is doing this, I gotta do this to stay competitive. And is that right or wrong? And then some people are just unlucky that the timing just happened. They don't have cash. Some people are lucky that they have cash reserve. So there's luck involved. There's bad decisions, good decisions involved. There's peer pressure. There's herd mentality. All of those things are in play. But fundamentally, when we look at a project to say, hey, do we want to save this project or not? We need to look at look, does this project have a sound team? Do they really have product market fit? Are they savable? Like some projects, you can give them $1 billion and they will just wipe through that, and that's obviously not good. So this it's not a black and white science mathematical formula that you can calculate in each case. Quite a lot of that are based on subjective feelings, etc. So, but to your second point. Unfortunately, this does allow many of the skeptics about the industry to create this narrative, which is very unfortunate. But there's still many strong projects that are going even stronger in this bear market, in this industry. So we looked at internet, a bunch of e-commerce companies failed, Webvan, diapers.com, a bunch of those guys. But guess what? Amazon is one of the most valuable companies in the world today. So just because there's a few failures doesn't mean the industry, the technology, or all the companies are bad. So we just gotta keep our heads down. We just gotta keep building, and we just gotta provide more users with more tools that they want to use. And then when our users continue to grow, people will say, hey, wait a second. There are a few companies that are still growing in this bear market, and hopefully I always think that building great products is the best way to counter any FUD, any negative skepticism, etc. Just be successful, and then all those other things go away. I couldn't comment. We obviously we look at some of those deals. We so far have not engaged in those specific deals that you mentioned. So obviously we did not engage. We did not fully engage. But it's not to say the deals are right or wrong. The deals the deals that doesn't work for one acquirer may work for a different acquirer because they have a different business, they have a different focus, they have a different philosophy, they have a different market, they have a different mindset. Some people, like, some exchanges want to go back to stock trading, target that market. That's, again, not a wrong or right approach. We are a pure Web3 company. We don't want to, we're not going back. We're moving forward. We want to build more Web3 tools. So there's different strategies that make different deals work for different parties or not. There are also geographic considerations, user-based overlap considerations. If it's a company that we already have very high user overlap, then there's no point for us to invest or acquire that company. We already have all those users. So there's many different type of considerations. There's no right or wrong. So I think any deal is done, that's done. And any platform that can be acquired or saved is generally good for users. So this means that the users doesn't lose money, or hopefully lose less money, or doesn't have to lose money. They have a much more smooth transition onto a new platform, etc. So all of those things are good. So generally, most deals are good. Personally, for me and to a large extent for Binance, we like very simple deals. We like deals, okay, look, what's your revenue? What's your user number? We don't like deals where, hey, I owe you this money, you pay me back this much money, you invest in me, I give you more money in loan, and then you bail me out. Why don't we just return all the money and go back to zero and talk about our net, who owes who money and who owes the guy, I owe you money, then you owe some shares in my company, that's it. So we like those very simple deals. But again, it's not to say that complex deals are not bad. Some very complex deals are very successful. But my preference is always keep everything very simple, very straightforward, or everything down to very basic core principles and go from there. So we look for very simple deals.